You spend bad money, you hoard good money, right? So what's the bad money? The bad money is fiat currency, US dollar, euro, yen, Chinese yuan. What's the good money? Bitcoin, gold to some extent. And so what are people doing? They're spending the fiat, they're saving, they're hoarding the Bitcoin, the gold, right? And so I think that's called Gresham's law. Could be mistaken on that. So yeah, you could put in a physics term, you can put it in sort of an economics term. You can take a look at what happened in sort of like Weimar Germany during their hyperinflation during the 1930s in terms of people got their marks, they spent them as quickly as possible, but they were also hoarding gold because they knew that was a real money at that time. So we're seeing the similar sort of thing just starting today. And yeah, Saylor can put it in sort of a physics terms, but I think in sort of a social cultural norm, we've seen this before every time any major civilization has failed. And they always print money. They always debase the currency, whether you're in a gold standard or not. It's the same thing over and over again. If you read enough history, it looks the same. It feels the same.
The reason I delineate that is if this is a physics question, then Saylor's idea of getting, because he puts the base case over the next 21 years that Bitcoin's going to hit 13 million. I don't know how you feel about that number, but for him, it's you can create inputs and outputs and see how rapidly the money is going to go from sort of that bad state of fiat into the more sound physics money of Bitcoin. So he likened it to a waterfall. And it's like, once the water starts pouring over the edge, you know, as long as the water line is above the channel for the waterfall, it is going to drain out back to equilibrium. It is a matter of physics for him. Whereas if it's cultural, then we are still open to what I heard Raoul Paul refer to as the path of most pain, because this is the thing that scares me when I look at this. Saylor is, it's ballsy, man. Don't get me wrong. And I'm as inspired as anybody else seeing what he's done. But nothing seems guaranteed in the future. And so to treat it like a physical certainty, I don't know, man. I don't have the cojones, I guess.
I mean, I think you have to take Saylor with a pinch of salt and understand where his position that he's coming from. He is essentially issuing dollar-denominated bonds and, you know, I guess an infinite supply if he can, and buying Bitcoin. And every 3 to 5 years, he needs to roll over a certain portion of his debt. And if his stock price is below the conversion price of his convertible bonds, he might have an issue. So yes, he wants the market to believe it's a physical certainty, because then you're not going to question the ridiculous price that you're paying for his stock. I'm more in sort of the cultural phenomenon sort of camp. We're humans. We're going to in the short term, we're going to say, oh, wow, you know, Bitcoin's 1 million, 100 million, whatever the number is. This is a physical certainty. This is the last cycle ever. You know, you hear those sorts of things on the internet. But at the end of the day, we'll get ahead of ourselves. We'll forecast some crazy dystopian scenario, some crazy hyperinflation. And then if you start to underperform the craziness, then the price of Bitcoin looks a little bit high. Maybe it comes down a bit. And so I think that markets go up, markets go down. We as humans, we're over optimistic and over pessimistic. We're not at that stage yet, but I definitely could see at a point in the cycle where we believe that there is no way that fiat currency could ever fix any of these problems. Therefore, Bitcoin is going to infinity. You'll hear people saying this is the last cycle and all this kind of nonsense. And then the price will dump 90%. As somebody who loves, you know, finance, what he's done in sort of a corporate finance situation with his convertible debt, how he's termed it out, how he used his access to the, you know, corporate debt markets in, you know, the United States to be able to issue 0% coupon convertible debt is a genius move. He needs volatility. That's what you're trading. So go up, go down. Bitcoin needs to move. If Bitcoin stops moving a lot, then the MicroStrategy trade might get into a bit of trouble. But again, I wouldn't worry about that now. That's 3 to 5 years sort of down the road situation. Right now, it's the bull market. So, you know, when the music's playing, you got to dance.
No doubt. All right, talk to me about the dance. So high volatility. This was something that I didn't really appreciate nearly enough. Volatility seemed bad. I like that the government was stripping volatility out of everything. But the more that I listen to you, the more I realize that volatility is the game. that if you're trading, that volatility is the light around which all the moths gather. Explain volatility to us. Why is it good?
So at the end of the day, what is life? Life is risk, right? Every moment that we exist in this universe, I wouldn't go so far as to say this, but some people say the universe is trying to kill you, right? You enter this world, you have no
We all lose,
clothes.
man, whether it's trying
Yeah.
or not. It gets us.
It gets us in the end, right? And so at the end of the day, we're trying to make these calculations all the time about how do I structure my life so that I can survive longer in this universe. And so at the end of the day, I want to have a strip of bets that where the upside, when I'm right, is greater than what I pay to take that bet intrinsically. So our life is a strip of options. And so the more volatile the situation, the more valuable the option. But the name of the game is how do I pay the least amount of premium as possible in life so that I make decisions where my, getting it right pays me more and sort of, feel good things versus what it costs me to take that bet. So we live in a volatile universe. Volatility is our friend. Suppressing volatility is not natural. And so government says, hey, through my ability to have, legalized violence and kill people because they don't follow my rules, I'm going to protect you. And so let me smooth out that life curve for you. Do what I say is essentially the name of the game for any type of government. And there is some benefit to that, but take it to the extreme, which is what, central banks have done over the past, 50 years or whatever it is, then you start to get into this unnatural state where the volatility is so low relative to what the natural just ebbs and flows of life in this universe are. And then things just blow up, right? And so you think you're safe, and then you get a 2008 housing crisis, or you get, the European crisis in 2011, or you get the regional banking crisis in the US in 2023. And these are all symptomatic of governments saying, we're just going to print a bunch of money and suppress volatility. But volatility is natural. We want volatility. We want to construct a situation where we have volatile upside outcomes with capped downside. And that's really the goal. And so that's what, Bitcoin and crypto really represents is there's this outcome where all the fiat money in the world needs to come into Bitcoin. Obviously, that's not going to happen, but you can think of that as sort of the extreme example. And your cost is the price that you pay today for Bitcoin. So some people paid $1 for Bitcoin back in 2010, and if they held on, now it's worth 104,000, right? But the most it could ever lose was $1. And so why wouldn't you take that bet? You know how much you're going to lose. It's the amount of fiat currency that you sold to buy Bitcoin. And so you can sort of self-select your risk profile based on your own situation. But there's always an amount of money that you can willing to lose to earn the 10,000, $100,000, $1 million X return on something like Bitcoin.